Hi, everybody. I had started the wrong webinar. Sorry if it inconvenienced anybody, but we're a go and looks like everyone's here. TGIF for me too, guys. Yeah. All right. Hi, Alexander, Didier. Everyone doing okay? Hope everyone had a good week. That includes you, Marco. You have a decent week, Alexander. All my trading warrior brothers and sisters, Arena, good morning. Hi, Danny. Yeah, Danny, we're at the bottom of the hour. I see you in here. Thanks for being here today. Appreciate it. Hello, Scott, Monica. All right, so I have the weekly Nasdaq chart up here. And if you guys recall, hello, Mustafa. How are you? Inshallah, buddy. I was talking about a rally in the market to month's end. And, you know, earlier in the week, it looked like that may not happen. Someone said I might get my wish. Actually, Nasdaq has a better weekly candle than S&P's. See that blue candle there? That's your weekly chart. And the S&P's, it's not quite. See, we're right back to the low of the opening range of the week for last week. One thing that is starting to happen here is the dollar's firming up a little bit. I don't know if that's going to be enough. You know, a lot of people are looking for 88.5, so that's another 140 lower. Canada tried to make a new low, and the weekly still looks ugly unless we really do something important here. But Canada is setting up for a 3 drive into next week. As you know, guys, I don't try and make my week on Friday. And I only had a couple trades this week, wrong on Euro, right on Aussie. So it wasn't a real active week for me. Of course, Bitcoin collapsed to my target. I have to respect so far how it's held that spike. And, you know, my target was 36. It overshot it by 6 grand. And it's trying to do some backing and filling off that spike. But I know some people are saying this is a 4 and we're going to have a 5 to take it to 20. And you know what? Everything is possible. Anything is possible. But I just want to tell you that I think we're near the end of the puffing up of markets across the board. And it's all going to be hinged on this. But I'm waiting for this 3 drive to happen here in Nasdaq. Here's the daily. You'll see it's pretty clear. Here's drive 1. Drive 1 didn't even confirm. Here's drive 2 up here. It didn't confirm. And perhaps we're going to get a 3 over 14,000. I know a lot of people are saying S&Ps could make a new high without Nasdaq. The way Nasdaq traded this week, that to me is a little more doubtful. The Nasdaq, I think, has just as good a shot to make a new high as the S&Ps do here. And the S&Ps are really only a few good days away. So you're being patient, waiting for month's end, may be, you know, the right way to go. Something that's happening here on the currency front in cable. You know, you could take a picture. It's forming a 3 drive right up here at the old high. So in case you don't know what a 3 drive looks like, you know, what I'm looking for in here on the daily and weekly, a 3 drive formation. You're getting that in the cable right now, but you know, I'm not going to start putting on short cable positions.
Oh, you don't want to be short. You don't want to be short the cable because, you know, Danny Blanchflower is coming on. So you just don't want to be short sterling.
Well, maybe Danny could get them to cut rates to -10.
Is that going to be it?
We'll talk to the Dove in a little while, in about 25 minutes. But earlier in the week, I thought we could go up there and make a 3. I'm just not a big Friday trader, and I look at it for the week unless it falls apart. Did nothing wrong on a weekly basis. So I'm not going to look for the market to negate the whole week of gains on Friday, although I've seen it before. I do think we're getting close, Blake. Everyone talking 88 and a half. Yeah, here's my theory when everyone's looking for one number. It either doesn't achieve it or it, isn't that important if it gets to it, and usually takes it out.
Yeah.
So there's almost like unanimous agreement at 88.50. I've heard it from so many people, but there are some guys, including Jim, that says if we take out 88.50, we're going to 83. So
I look, the dollar's just not acting well, and maybe the 88.50 is such an important level, like you said, that everybody's going to be targeting there. I mean, frankly, well, I'm gonna say the one thing that is going to prevent the dollar from really getting its bearish move on is this reversal we're seeing in the euro today. Now following the PMI numbers that came out overnight, and it's the German, I think it's the German data that really is weighing on the euro right now. But if the euro has a really poor performance today, it's hard for the whole index to so
it is. There's a weekly, though. It's a blue candle. It has a nice little wick there.
Yeah.
But if it does something like this or something like this today, then you have something. But it almost looks like we could blow to over 124 for 1, 2, 3 before the top is in. So anyway, going home flat, and I'll take a look at things over the weekend and come up with some ideas. One thing that's important to me in the metals, and gold had a great week, right? Almost a breakout week, is how badly silver is lagging. We almost had a reversal week in silver compared to gold, and this is on the verge of turning up. This gold silver ratio put in a higher low off this high, and this means gold's going to continue to outperform silver for a while.
And when that gold silver ratio tends to turn up, it also signals to me that we might be a little closer to some risk aversion than
I think we're a week or so away. We have this melt up to 4,300 or so next week into the long weekend. I think we're there in a week or so. I was talking month's end and possibly new highs. I guess I'll find out if that forecast is right next week.
Yeah, we'll find out. Well, hey, I'm gonna take over the charts. I want to show you guys really quick, Dale. You were just talking about the dollar, and I want to. I've got control here. Okay, so here's this is the kind of resistance I've been watching all week, is the spike high that we had from early February. You can see we turned down pretty aggressively here. I'm not really worried about the euro at the moment from a bullish point of view, as long as we're above this this trend line. But as you can kind of see here on a 4-hour, we are making lower highs, and so that's starting to concern me. And actually, from an intraday perspective too. And I know it's Friday, and we do have Canadian retail sales today. We do have some. Do we have PMI? Let me just double check. Yeah, we have some flash PMIs coming out a little bit later this morning. In the event that the dollar, kind of gets its little squeeze on, then we got a little double top, and that could play out going into a Friday. It's lack of liquidity, and a lot of times Fridays, Dale, and you've seen this, I've seen this a lot of times. We have this, it's a one-way market. No one wants to get on the other side of, everybody has the same attitude you have and the same attitude I have. It's like, well, it's Friday and I'm not willing to step in front of the bus. So, if the euro really starts buckling under some pressure, we see the dollar squeeze a little bit. We could see us try to play out a double top, but more importantly, we'll take out this upsloping trend line. Next thing you know, we're slumping down towards, or back below 121. And then that puts a little bit of a damper on any type of, longer term rally that euro was, people that are long euros are thinking. And then we're rejecting the 78% retracement on a daily chart. We can't make higher highs. And, then the narrative starts flipping the other direction. I think we might be getting ahead of ourselves by me saying all this because, obviously the first thing that's got to happen here with the euros, it's got to take out these lows at 121.50, 121.60. We start breaking below there, and then we might have some problems. But I also want to point out that one of the things that we were looking at in the cable. So if you guys are not, part of the ForexAnalytix family, just so you guys know, I update the end of day analysis on the basic technical analysis every day. That's one of my job duties here at ForexAnalytix. So, the end of day analysis for the cable is the 141 level held today, and this could allow for a move to brief new highs at channel resistance at 142.30s. So the sterling, and that was last night. So the sterling today, we did hit a new high. The high was 142.34, and then we reversed right back below 142. Now, the issue is, I'm mentioning this because A, the euro is turning lower. B, we did hit new highs, and C, a false breakout could put us back below 141.70. And the reason why the reason why I want to say all this is because Dale was just mentioning a possible 3 drive, but if you put together the euro kind of turning lower here, the sterling showing a bit of a reversal up here, if you start to see the dollar gain some strength, just be aware that it is turning against other currencies. It may not be the one that you're trading. Like you may be, let's say you're trading, let's say it's the dollar Canadian post retail sales data, right? Let's say the Canadian retail sales data here in the next 20 minutes is kind of shoddy, and the dollar Canadian spikes up a little bit. And you start saying, okay, I'm going to play the dollar Canadian on the long side because it's in this, it's in this channel, but, we're holding, this 120.50 longer term support from, 2019 or wherever the lows are. I have to go back and look at the chart. Well, we can go back and look, but I just want to say if the dollar Canadian starts spiking back up towards 121.30 here, and you're like, okay, we've been talking about this channel all week, I'm going to fade it up here. Well, before you do that, take a look over at some of these other majors and just make sure the dollar isn't, ripping their socks off over there before you start trading the dollar in that currency that you're actually focused on that pair you're focused on. So I think today, especially on a Friday, and we've seen a bit of a dollar bounce, and I know everybody's bearish the dollar, but, we're seeing a little bit of a dollar bounce here, and see how we're holding the lows.
13 on DSI, Blake.
Yeah, that's right.
Dollar.
DSI daily sentiment index was registering 13 is pretty extreme. It's not like super extreme. We start dipping below 10, and then, then things get really, reversey. But the fact of the matter is, when you're down here, or and you're holding these support levels, and it's a Friday, and you're like, there's probably some people that are short the euro, or short the dollar from earlier this week, that's looking at these moves saying, maybe I don't want to be short going into the next week, and frankly, I'm not convinced with the dollar on it turning higher unless we get above this trend line here. And you guys know I've been referencing that all week, but you can see we held 127% extension. We got little support starting to hold here. So, I think anybody who's short the dollar is probably starting to be a little nervous right now, right? A couple other things I wanted to mention. The emerging market currencies like the dollar Mexican peso, it's holding up pretty well. It's been weak, and it's something that we've talked about the whole week. This week is that emerging market currencies hadn't sold off as stocks sold off. So I was a little nervous about stocks moving lower as the emerging market currencies weren't weaker. You know what I mean? Usually when stocks are weak, you know, when we were dipping back below 4,100 earlier this week, because the dollar Mexican peso wasn't, you know, breaking out to the upside, I was a little hesitant about being too short risk, you know, too bearish on the S&P while we were down there. But now here we are up here at the 4170s in the S&P, and the other thing we don't see is we're not seeing emerging market currency strength. I mean, I have to look at the rand. The rand is actually trying to push lower, but you know, we could end up getting a false breakdown here. The dollar Mexican peso is just really not moving, and you know, this is probably one of the currencies I'm going to look at to cue on, like, my, you know, next view on risk. And I guess the one last thing I wanted to talk about before, I know Steve probably has a few things to say. Steve, are you here?
He was driving.
Of course I am.
Oh yeah,
Maybe
that's
there.
right. He was. He had. You know, one of the things about the kids going back to school in Greece.
Oh, you have to drive them there.
Yeah, and the timings. You know, I know he's super excited about having his son back at school and out of lockdown.
I absolutely am.
You know, Aussie didn't do much. Aussie didn't do much, Blake, on this dollar decline at all. You know,
no, the Aussies really
weak.
It's very much underperforming, and also the Kiwi is in a nice triangle, and it has failed to rally too. Obviously, these are levels that we've been referencing all week. This consolidation here, and the Aussie not being able to break out of the 78.20 to 76.90 range in this head and shoulder. It's still stuck, and yeah, I mean, we've had this nice bounce in risk, and nothing's happened. So
that Aussie yen, when we go risk off, that Aussie yen, or at least just straight Aussie, is going to be really a nice trade, I think.
Yeah, I think so. If we ever go risk off, I think I'd like to say it's probably going to be a great short, but we'll see. So Steve, we got about 10, 13 minutes before we have retail sales out of Canada coming, and we have Danny Blanchflower coming in today, which is a treat for all of us. But anything that stands out to you, because I look at, for me, the one thing I want to say is the standout for me this week is the breakdown in Bitcoin below 43,000, and the fact that we're holding below 43,000.
I agree. That's a key resistance area. We're saying that yesterday on the morning.
So you guys are in the 20K camp, that this is a wave 4 and we could go down for one more wave towards 20.
I think I said that yesterday. I think that's the danger for both cryptos, meaning Bitcoin and Ethereum. There is a danger that we have at least one more leg lower left. So I think in the case of Bitcoin, as long as we trade below 42.5, and even I can even go as far as I said yesterday to say that as long as we're trading below 47,000, which is the previous low, I think there is a danger that we haven't seen the low yet. And that would also go well with the fact that I see a lot of satisfaction in the crypto cult. They believe that that's it. You know, it's already over. It was like a bout of 24 hours worth, and it's totally over. And that was it. That was the dip. They were all smart enough, or many of them were smart enough to buy it. And it's now clear skies for the next
year,
6 months, year. You know.
How about Dogcoin get all its losses back, doggy?
Well, you know, one of the things DJ just said, hey, I think 20,000 would probably get a few fence sitters into it. I'll tell you what, I'm a buyer at 20,000. I think we could actually go lower than that. I actually think looking at Bitcoin, we could actually drop. I think we could probably actually trade towards 15, 17K, just on the simple fact that this is a really key breakout point.
That was the previous high before it went to 3.
Yeah, everybody's going to be looking at it. So I mean,
it's definitely possible. I mean,
Oh yeah.
Having seen, these markets move, it's a target that theoretically speaking, we can reach within a couple of days, right?
Yeah, I mean, it could happen. Look, I
Yeah.
mean, we were down at 30,000 yesterday.
But
or day
Blake,
before yesterday.
for me, this week is not just significant for the move we've seen in cryptocurrencies, but in my opinion, there is a second element here that not so many people seem to be paying attention to.
Gold's breakout.
Yes, that exactly
I'm a
is
mind
my
reader.
point.
I
Yeah.
was Kreskin. That was my dad, Kreskin, on Johnny Carson. He used to be able to read people's minds. So you're too young to remember that, Blake. You remember Kreskin?
I don't, but I used to watch Johnny Carson with my parents, but I don't.
Yeah.
But I was too young. I was like,
Yeah, I know.
I
You're
was
not
5.
anymore. All right.
I was like, yeah, I was like
All
5
right.
or 10, and you were probably what, 70 at the time?
About 55.
Sitting back in
at
your
that time.
recliner. Yeah.
Yeah, that was me.
But
I'm 99 right now. Next week,
yeah.
I turn 99. It actually is my birthday next week. So,
Hey, well, happy
99 what? Eons?
99 decades. So
90,
I'm an old
99
soul.
99 Luft balloons. Hey,
Yeah.
okay. So
99 lovers.
Steve
Maybe.
was even too long for
I
the
can't
99 Luft
remember.
balloons. All right, we're
Yeah.
talking. Hey, listen, you pointed out that we have gold breaking out. We are above the 200-day moving average, and we're above this like downsloping trend line. Dale did point out that silver is really underperforming, and here's the thing. Gold looks pretty good, and if gold ever turned lower, I would not want to be long silver right now.
Oh, I agree with you.
Yeah,
I agree with you. But in any case, I need to reiterate here my thesis. I agree with you. Silver is more complex looking.
Yeah.
And yes, both silver and platinum, which I'm closely monitoring, technically speaking, they do seem to have a valid scenario for another leg lower. But in any case, even if that is what happens, I'm a buyer. I'm a buyer because I think that it's going to be part of a more complex corrective correction. So yes, I do see this divergence between gold and silver and platinum. Gold seems to be breaking out. Technically speaking, looks like a legitimate breakout, but silver and platinum has not followed in its lead, and that is something I pay attention to. Nevertheless, if we close the day and the week above this trend line, and as you said, also the 200 EMA, horizontal support resistance area, all of them 1850, 1855 in that little range, I can't ignore it. On the other hand, right?
Yeah, and one of the other things, Steve and Dale, one of the other things we should talk about is that, remember, gold is the anti-Bitcoin trade. Remember that? I mean, all the people. What I mean by that is, and this is something I think I mentioned.
Most gold people hate crypto. Most crypto people hate gold.
Right,
I don't think so, actually.
But wait, hold on. Let me. So this is something that we talked about yesterday in the daily roundup, which is a Forex Analytics client only webinar that we do. But I think it's important worth talking about, is because we were talking about the Bitcoin slide post the announcement from the Treasury talking about transactions over $10,000 being reported, blah 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 blah. But the reason why gold Bitcoin, this relationship is so important, is because you might see Bitcoin come down and maybe gold catches the bid because of that, because you get the reason why that happens is because whether or not you like it, I believe, and I think most market participants at this point believe, that inflation is coming and is here already, and we will see it actually, it's not going to be transitory. It's going to be more, it's going to stay with us for a while. And to protect yourself from, a rise in inflation, traditionally you'd buy gold, but you want to buy assets, and, whether it's Bitcoin or gold, pick your poison. But, if people are selling Bitcoin and they still want inflation protection, they're going to be, moving into gold. So I think gold might be rallying for a couple of different reasons, if that makes sense.
For sure it does. For
Yeah.
sure it does. I've expressed, of course, my resistance to accepting the idea that there are people that actually believe that Bitcoin, legitimately believe that Bitcoin or any cryptocurrency, for that matter, is a hedge to inflation, because that's ridiculous even to assume. Don't listen to what the pundits say in the financial media, because they always try to find the narrative to excuse price action. So what we've had is, during the past several years, we've had many of those years Bitcoin, appreciating strongly, and every time they want to find an excuse why this appreciation is taking place. Now, the fact that they're trying to find an excuse, and between all the excuses they have churned through, inflation protection is one of them, doesn't mean that's the case, and it isn't the case. Because, simply put, gold is a protection, a hedge for inflation, because it has intrinsic value, because it is a metal we use every day, and because it has real properties, and that is why it's going to keep adjusting its value to the purchasing power of fiat currencies. There is no argument to be made for that for Bitcoin or anything else that's fiat, because people seem to be forgetting that Bitcoin is as much as fiat as the dollar is, meaning both are backed by nothing. As simple as that. This is a reality.
Wait. But fiat is backed by the economy and the people behind, and the people behind the economy. When you say Bitcoin's backed by nothing, I agree with that.
Mm-hmm.
It's backed by its scarcity, but I do believe fiat currencies are backed by its economy and the people behind it.
Yeah, the same thing could be argued by the Weimar Republic in the 30s, when they ended up bringing carts full of money to the grocery so they can buy something. Yeah, that was backed by the economy as well. But the real fact is that, globally speaking, in the developed world, we have deteriorating economies, and to compensate for that, what we do is we keep on printing more money.
Wait. Deteriorating economies.
Yes.
Have you seen iPhone sales, for crying out loud? They're through the roof, baby. Don't even talk to me about, like, don't even go there. Hey, listen, Steve, this is a really, it's actually a pretty great conversation, but we do have retail sales out of Canada coming, and we have
let's see what we get from there.
Yeah, so really quick, let me take a look at the Canadian dollar.
USD CAD, by the way, I mean, yeah, there is some slowing in momentum, but in all honesty, this downtrend has done nothing wrong so far, right?
No, and we really have to get back above 122
at the very least, to alleviate.
Just for me to think that we're going to squeeze back towards 1.25. So it's trading really heavy, and I thought earlier this week when we broke towards 120, especially if you guys read my blog post from last week where I said, hey, we can move to 120. Nidish in our chat room, who's in Singapore, he was mentioning earlier today, we can't forget about the there's a lot of 120 expiries, so we could probe down towards 120, maybe even below, just to because of all these options that are around this level.
I'm buying it next week.
What's that?
I'm buying it next week.
You know what? And maybe based on your 3-drive trade here.
Yeah, 1, that's why.
2, 3, right?
Yeah.
So maybe at the 119.70.
It's worth a shot.
Yeah, I mean, relative strength.
Might be the case, but in my opinion, the prudent approach remains that it is too late to sell it. I mean, if you haven't participated in this huge move, like from 147 down to 120 almost, right? It's too late to sell it. But, would I be blindly going against this move? Nah.
Well, I wouldn't call a 3-drive formation doing something blindly.
Yeah, I mean,
You've seen enough of them work. Like
no,
the
I've seen
top
enough
at-
of them work, but
the top of Bitcoin was a 3 drive
Hey,
No,
wait,
no,
wait,
no, I
guys,
agree with you.
Hey, listen,
blindly.
we actually have data coming out in 10 seconds, and then Danny's going to come in. So,
Yeah.
but
trade
look,
blindly.
when you're trading, as long as you have a plan, as long as you got a plan.
I'm going to take my.
Shoot. I'm sorry, guys. I didn't mean to do that.
Called? Blindfold off.
All right. All right.
Okay,
Hey,
strong
retail
retail
sales are
sales.
stronger. Canadian got a little bit of a lift initially. See if we get any
Yeah.
revisions.
Oh,
but,
shoot.
you know,
I should have bought it blindly a minute ago.
you know what we're doing is we're seeing the price action just exact. As most of you guys know, I think I'm a firm believer that Canada gets a lot of their data early. It gets leaked.
Yeah.
You know, you can see everybody is expecting strong Canadian data. The dollar Canadian was slumping, and then we get a nice reversal. So anyway, hey, that's just me being a skeptic, and maybe you know, your guest today could give us a little bit more insight on that. But before I let you guys go, I want to say thank you, Steve and Dale, and thank you all our listeners. You know, for listening in throughout the course of the week. I appreciate each and every one of you. And if you're listening on YouTube, please give us a thumbs up if you like these free face webinars. And remember to visit our webinar sponsor, Pepperstone Securities. Matter of fact, on Traders Summit, I know we just posted a video from I don't know where it's at. It's a video from Pepperstone Securities, and the CEO of Pepperstone talked about the crypto move today. So make sure you check it out on Traders Summit, but also visit Pepperstone Securities. I'm doing something pretty cool with these guys in the coming weeks, so I think you guys are going to really enjoy it. Anyway, Dale, have a great interview. Steve, thanks for being here. I'll see the rest of you guys on the morning edge in about 45 minutes.
We'll see them in 45 minutes.
Yeah, thanks, Steve, for being here today.
Enjoy the interview.
I'm kidding. Danny, welcome back to Face.
I'm here. Can you hear me?
I can hear you loud and clear. Can you hear me, buddy?
Yes, my friend.
All right, so it's welcome back.
Thank you for having me. I had fun the other day.
Yeah, so
you guys.
Yeah, so you know, I thought I might clarify some of the things that I said. We had an exchange on Twitter.
Right.
And, you know, just show you a couple of things that, you know, and you can't blame this on the Fed. I mean, it's weather, it's, you know, all kinds of, getting a correction. But I mean, you look at the price of beans have doubled. The price of corn has, you know, 250%, wheat, you know, and you all know what happened to copper. So anyway, you know, I remember, I think it was in the 80s. It was, you know, when Volcker took rates up to 18%, you know, we had a bull market in grains there because of a drought. And it, even though rates were going up, it didn't break the corn until they really got extreme. They had much bigger impact on industrial type commodities like copper and oil and lumber, because, you know, with 18% mortgage rates, it's the opposite of demand for lumber today. So I just wanted to show you that some of these things are out of the Fed's control, but I really, I really wanted to talk to you about what you thought about Janet Yellen's statement about 3 weeks ago, and then her retraction of, you know, that higher rates may be coming and the market sold off, and then she had to retract it. What was that about?
Well, can I tell you a story?
Yeah, sure.
Let me tell you a story. So I know these people. I was in Janet Yellen's office once, right?
Right.
And she said to me, if you remember this is the very first press conference. She said to me, the biggest mistake I ever made at that first press conference was answering a question.
Yeah. Okay.
Which of course she said, I never made that mistake ever again. I mean, I think obviously the story you and I have talked about is what is going on in this crazy recovery. And obviously the questions are, you know, there are supply bottlenecks. And the sensible thing for the central bank to do is to sit and watch and wait. That's the right thing to do. And I think obviously market traders want to worry about, what the heck is going on here. But I think I would take people back to 2008. And I was talking with my students this week about the meetings at the Bank of England in July and August 2008, where the inflation rate went to about 5%. Oil prices were heading upward, and people were making trades at $150 a barrel. And on my committee, there was a vote for a rate rise as well as a rate cut. Well, look at what happened afterwards. So of course, everything plummeted. And I think that's the first thing. I mean, obviously the question about wheat and soybeans and all of that stuff is what's the source of the rise? But I would say, and I would say to my students, there are two things. The first is in the inflation terms, there are base effects. The second thing is that if you don't like the fact that the price of lumber and DIY has risen, well, don't buy it, go buy something else. So that's how inflation gets moved. But I'm looking, you talked a bit about the UK. So the UK this week was basically the rise in inflation from 0.7 to 1.5 was entirely driven by base effects, almost entirely. And there's going to be a big volatile ride. Inflation is going to go up and down by 0.6. But in the end, you look through it. The central bank, Janet is right, the central bank looks through it and says, these are once-off changes. Most of the stuff, I mean, I understand that food and energy is a little different, but everything else, if the bottle of red wine rises, that doesn't mean inflation rises. It's just you go buy white wine. If the price of lumber is higher, well, put it off, do something else. So I think there's that. I just don't.
It's added about $34,000 to any house that's built.
Yeah.
So you're saying rent instead of buy.
Yeah, no. I mean, there's all these stories, but the crucial question for Janet, and she's completely right. I mean, most of the time, I think Janet's completely right. The question is for a central bank, what does any of this do to its target, which is inflation in 2 years' time? And I see most of this as being transitory. I don't see, and when you talk back to Volcker, what was so crucial there was that these inflationary increases in commodities and other things, and oil, were able to be translated into wage growth. And I don't see any of that. So I'm still, I mean, you call me the dove. I'm not sure that's right, but well, remember at the Bank of England, I used to think there were three kinds of people: hawks, doves, and pigeons.
Oh, yeah. Lots of pigeons. You got to go for the
pigeons. Yeah. And actually, there was one person on my committee, people said that person was a really good person to listen to because that would always tell you the middle. So knowing the middle sometimes helps.
Listen to the pigeons so you could go the other way.
Yeah, exactly. So the trade is on the pigeons. But I do think, I mean, what we have to get to is what's the source of these things. I have a friend of mine in lumber who said to me the big rise in demand for lumber was actually during the lockdown was that every restaurant was building themselves a deck and people were sitting at home when they were doing DIY things. But presumably that the question is, does that continue itself? And I don't know the story of soybeans, maybe you're better than I am, but I just think people don't understand on the inflation front, it's almost entirely predictable because we know each month what's being dropped. And we know what's coming. I mean, in the UK, in 3 months' time, we're going to see a minus 0.4 dropping and probably a plus 0.4 coming just because of Anno Domini. So in 1 month, inflation is probably going to jump by 0.8, but that's going to drop out in 12 months' time. So I'm kind of sit, watch, wait, and follow Janet, who now is of the same view, as is Jay Powell.
Okay, and
pretty much as is the Bank of England too.
Okay, is the Bank of England happy about a rising pound here?
Can I tell you another story? I mean, obviously that's an issue. I mean, $1.42 is an issue. I'm probably one of did the dumbest thing. I lived in the US, went to the Bank of England, paid in pounds, and I spent 3 years trying to talk the pound down. And so by the time I left, I went there and it was $2 to the pound. And by the time I left, it was $1.50. So I talked myself into a 25% pay cut. I think they would be obviously concerned about the level of the pound. The pound looks very high. Part of the problem at the Bank of England is it's unclear what's going on. 3 people are about to leave. So a third of the committee is going to leave in the next couple of months. Will be reappointed, but it's pretty late to 2 of them to be reappointed. So I think, again, the MPC is going to sit and watch and wait, and we'll see. But I'm sure they're not that happy about the strength of the pound.
Yeah,
I would be kind of talking down.
I think Janet has expressed, like every other former Treasury Secretary, they all want a strong dollar, even though at times, like right now, Danny.
Why?
I mean,
why? I mean,
I don't know. You know her.
I would
call
prefer
her up and ask her why she wants a strong. She said it. Okay, that she wants a strong dollar. I don't know why.
Why? I mean, I understand the thing saying America.
So they could keep selling debt and not have to.
Yeah, but think. I mean, the economy. I mean, in 2008, once we went through the crisis, the falling value of the pound helped the UK economy because it helps exports.
Right.
So unclear to me why a policymaker would actually think having a strong dollar was good. I don't know.
Okay.
I mean,
well, they don't have to worry about it right now, do they?
No.
Because I mean, you look at what's happening in the dollar, and we're on the verge of, this is a massive top here. A lot of people are thinking we're going to hold, and it does look like a range, but there are a lot of dollar bears out there.
Yeah.
So,
yeah.
So
Well, I mean, the pickup in a sense in the UK is obviously an issue. I mean, we're seeing crazy things. I mean, the retail sales numbers out this morning up 9% or something, and the PMI is in the 60s, looking strong. I mean, the issue is obviously there is going to be
compared to the lockdown, they're strong.
They're coming out of the lockdown, but I just think, Dale, we've talked about this before, and the reason why for policymakers you have to sit, wait, and watch. And I think the same thing, the arguments about in many of these states about you say, oh, well, we've got to remove the unemployment benefits. I mean, the question is, in the realigning that we're seeing, how many of the firms that were furloughed are going to disappear? What long run changes in behavior are going to happen as this lockdown, loosens?
Well, I was going to go to Coco's last night, and they closed it down the street. I get the senior citizen special, but
well, Hanover, New Hampshire, the main street where Dartmouth is, and we're probably going to go back to real teaching in the fall. But half the places in the town have closed. I mean, I mean, I was seeing some numbers again yesterday from Torsten Slot, a friend of mine, who sends things around, and he showed this thing about footfall in Times Square, which is still about a third what it was 18 months ago.
So even with all of this, Danny, going on, all this support, and all the loans to businesses that are forgivable, that we still have a problem with businesses and jobs coming back, that we're in a solvency problem now. It's not a liquidity problem.
Right.
Is
Absolutely.
that what you see? Okay.
Absolutely.
And lower rates don't, central bank action cannot save a business from going bankrupt.
Absolutely. And of course, I think in a way the line that Janet and Jay Powell have to take is that this adjustment is going to take a while, and you have to ease the path of adjustment. Firms are going to close. Firms can close much more quickly. The new ones can re-emerge, and there's going to be a change in consumption patterns. So I think that's the big thing that's coming. I mean, okay, Hanover's pretty empty now. Many of the pubs have closed, and the gelato stores. I mean, the question is, presumably those spaces will refill. But they haven't refilled yet, and there's no sign that the pub that's closed is going to reopen. Presumably, it will down the road, and rapid growth will come. But the question is, are you and I going to change our behavior because of a result of what's happened? And I think so. The right strategy is to wait and watch.
I mean, I know that everyone feels like they've been confined for a year.
Right.
And there's going to be this rush to, take vacations and go to restaurants. And I think that once people go out there, they're going to realize it isn't 2019, even though we have a vaccine. You'll still see servers with masks. And you know what? Prices are going to be up. You go to any restaurant, you even go and get a haircut. Everyone's charging more to make up for lost time during the pandemic. And I think there'll be exhaustion by August.
I completely agree with that.
Do you?
And there's going to be, go back to my earlier point about, someone was, I gave a presentation yesterday, and they were asking me about the prices to do DIY. So I said, well, why are you doing it? If the prices have gone up, don't do it, do something else. And when the prices have gone back down again, go back and do it again. I mean, if prices rise, exactly what you said, people then respond to it, right? The prices have risen. What was attractive at the price of X is no longer attractive at price 2X. That's the long run change in behavior we're going to see. And the economy has to readjust. So a policymaker like a central banker should sit there and say, we have to ease the path of transition. And yes, there are going to be bottlenecks. But in the end, what we're going to see, I suspect, is bigger changes in behavior. I mean, the story, in a sense, which in the United States has always been a puzzle, which is a recession comes and you'd think that people would precautionary save, and they don't. But after a splurge, Dale, you may well be right? After this big splurge, suddenly people go, hang on, hang on, maybe I should, should prepare for something like this coming again. I mean, that's the issue. Are people going to use this lockdown pandemic as a way to change their behavior? I don't know the answer to it. Nobody does, but I suspect what you just said is right. People probably are.
Yeah, I think people have, I've never been locked down because, I'm not a criminal. I've never been locked down for a year. It's affected me, whether I admit it or not. I think a lot of people have PTSD over this, and there's no way that behavior doesn't change over a shock like this.
Dale, I'm interested in what people think, what the cause of do you think the cause of I understand those things. What's the cause of the rise in these commodity prices? I mean,
Well, you could get any price to rise with a weaker dollar, right, Dan?
Exactly.
You get nominal gains, but in the grains, for example, it's yield problems, weather problems, not as much bottleneck. Copper, commodity demand, mainly from China. They were behind a lot of this copper move. And then, the lumber
moving up, right? Exactly.
Yeah. What's your take on China? I mean, it's so opaque to me. I have no idea really what's going on, because there are a lot of people that are saying that China continues to weaken. And I remember in 2008, maybe you do, that they weren't as affected by the Great Recession as the rest of the Western world was. And so they were the engine of growth for the whole world. And they kind of dragged us back up out of that Great Recession.
The story I'd always heard, which I never know whether it was true or not, was some have argued, you may have heard this, that actually the Beijing Games was actually one of the precursors of a slowing of the global economy, because Beijing being so polluted that the Chinese pulled back on production to make sure that the air was clear. And if you just, the timing's right? The timing of global slowing. And the other thing, in fact, if you go back to the Baltic Dry, look at the collapse of global trade. That came around that time. So it all's a little bit sort of non-transparent. But if you look back at the Baltic Dry, which is the measure of global trade, starts to fall dramatically around June. So I think China's probably pretty crucial here, but it's hard quite to understand. As you say, it's opaqueness, but I think it is crucial. It's just trying to understand what's going on. But I think there's something to that. Your listeners may have other views, but the timing kind of looks right.
Yeah, and also, there are big changes that are going to come. Germany's a very important part of the European Union, and Merkel has been there forever. And there's a lot of nationalists, kind of right-wing things happening all over the world, here, Europe, everywhere. What do you think happens to, say, the euro during the transition when Merkel leaves?
Well, the good thing in a way for the Germans, you and I spend our lives worrying about uncertainty and surprises, right?
Yeah.
So I assume that given what's going on, that they will try very hard not to have surprises. They've done pretty darn badly in terms of the vaccine, and in a sense that has actually made Johnson in the UK, his popularity ratings have really held up, not least because of the relative performance of the vaccine in the UK compared to in Europe. So I think that's a big deal. Just go back to another thing. The big thing in Germany, actually, I spend quite a lot of time with my students looking at population. and Germany has this giant
demographics.
Yeah, the demographics in Germany, especially Germany, Italy. I mean, if you look at the number of 15-year-olds and 10-year-olds and 5-year-olds, the numbers are tiny. So Germany is going to have to be in a position, as Merkel already did, taking in people from abroad. But Germany is going to be faced with, they do not have enough people. And obviously the pandemic, one of the things around the world we're seeing is that the fertility rate fell. People didn't use the pandemic as an opportunity to have lots more children, as they did whatever it was in New York when the lights went out. So fertility rates around the world have fallen. So a German chancellor is going to have to deal with a very aging, declining population. Oh, there you go. Pictures of my fish. I'm a fishing guy.
Man, that is a huge. What is that, Danny?
Well, that's a jack. If you keep going down, I'm a snook guy.
Look at that.
Snook.
Yeah, okay, and
there you go.
And Danny throws these back.
35-inch snook. They call it the tug is the drug. There you go. Look at that lot. There you go. Redfish.
Well, all right, there's happiness. So you know, and you're talking about happiness in this article, and our last interview was about the misery index. I know it's a long-term study. And are you seeing any drop in the misery index because of vaccinations and people?
So one of the things that I have various people working on. I mean, the first thing to say in the United States is we have a major issue for the less educated prime age, particularly whites, but also for Native Americans and others, which is that they have extreme levels of distress. And Angus Deaton and Case have written a lot about what we call deaths of despair, which is that peaks amongst the prime age. But the latest data actually is a big worry. The worry is, so the US Census Bureau produces a whole set of things called the Household Pulse Surveys. Now, every week or so, I think people should be interested to go look at it. So it's Household Pulse Surveys, and we can get the data. Well, what it turns out there, Dale, is that now, who's been most impacted by, there's crossing fingers and hoping here, guys, most my view of economics. So what's happened is that this has really impacted the young. So in terms of, think of the students coming out of high school, students coming out of Dartmouth and other places. What have they been able to do? Have they been able to get jobs? And the story that we're seeing is anxiety levels, depression levels, impact of this virus, of this lockdown. Not surprisingly, it has impacted the young. We thought that problem really had kind of gone away. Youth unemployment was the huge issue in 1980 and 1990, and all of us worked on that. And we thought it was about the prime age. So that's a really big deal. What are we going to do about the fact that, the young are impacted? And the one thing we know is a spell of unemployment when you're young has really bad effects later. So I think that's an emerging problem. And think of their spending when they're not able to get jobs. Such jobs as they get are not that well paid. So this demographic group, I would say, of 18 to 22-year-olds are really a big worry, and that's what the latest data suggests. But the evidence in the United States is that we have a huge mental health problem. We have a huge problem of opioid deaths. We have a big problem with suicide. And in fact, what's happened is that the pandemic has reduced life expectancy, but that was falling even before the pandemic came. So I would say that's a crucial issue, which is going to impact the economics, impact people's sense of well-being, and that's a concern.
All right. Well, this study that you have is close to my heart. I'm hoping that these kids, when I came out of college, we were in the recession in '76, and I didn't get the greatest job. I was paid $75 a week to run orders into the pit on the CME floor. But I'm hoping it's situational for these kids, and that it's not, clinical.
Well, it might well be. It might well be. I mean, the evidence we have.
Because that's a lifelong battle.
It's a lifelong battle. I'm completely right. I mean, the evidence we have is two things for the young. If it's a really big cohort when you graduate, that's a problem. That's not true now. But the really big deal is what's the state of the economy when you graduate from school or college, and that turns out to have not just have a short run effect, but it has a long run effect, which may, as you say, be clinical. So this is something we need to you need to think about. And in a sense,
because it becomes your paradigm.
Yeah, it does.
Right? Everything's a struggle. Everything's hard.
Yes.
So that's what you expect.
Well, Dale, remember that I've argued a great deal in the book. In my book, I talk about the fact that, so the Fed says from 2015 to 2018, the US economy is at full employment and everybody's feeling great. Well, Danny Blanchard looks at the data and goes, no, that's not how it works. It can't be true that we're sitting at full employment if there's all this hurt and pain and unhappiness going on. And in fact, the rise of populism around the world didn't happen because everybody was feeling great. And I take the sense that if you were at full employment, that would mean that the balance of powers to workers had risen. So in a sense, the whole Fed era from 2015 to 18 was not listening to the conversation between Dale Pinkert and Danny Blanchard, which basically had it right and had it right.
Yeah, and you know what, Danny, I enjoy talking to you. I mean, it's fun. Okay, besides trying to inform people with compelling stuff, it's fun, and I hope some of the good natured discussion that we had today lifted some spirits, and we all need hope, okay, because hope is the oxygen in our life.
Well, absolutely. And I think if you're a central banker, I mean, if you listen to Janet, as I said, I've known since 1993. I mean, she has a good heart, and she's a labor economist, and she understands, and so does CC. She understands what you just said. It's about giving people hope, and it's allowing them to suggest to them that this transition, there's people at their back helping the transition. But I think the central message is from a labor economist like me, there's much more hurt out there than you would think, and this is going to impact spending behavior. It's going to impact all sorts of things, like the unemployment rate and other stuff. But we should be mindful that we've never seen anything quite as unpleasant as this. It was bad to start with, and then we got hit by another shock, and we're going to have to adjust from both things.
Well, I'm hopeful that you and I are going to have another talk maybe next month about what's going on and unfolding in the markets, and with central bankers. And thank you so much, Danny, for your time.
Let's do it. Yes, sir.
Okay, buddy. All right.
Thank you,
and good fishing to you. I usually say good hunting.
It's blowing too hard to go at the moment. 30-mile-an-hour winds and
that hope I talk about, Danny, it's in your life. Don't use hope in your trading and investment plan. That's carbon monoxide for investing, but use hope in your life. And Danny Blanchflower, thank you so much for hanging out with us today in Face.
Yes, sir.
Have a great weekend.
See you soon.
All right. Everyone else, have a great weekend. Thank you very much. Hope you have a great weekend. Planning for next week. Use the weekend when the markets are closed and you could think clearly to plan your moves for next week. And you could join the team in 18 minutes for the morning edge to wrap up your week. And remember, it's great to have hope. And one way you can remain hopeful is to be grateful for something, and not just pips. So don't just count your pips, count your blessings. Adios, everybody. Have a great weekend, and we'll see you next week.